Hey everybody, it is Brian Shannon from AlphaTrends.net. Today is Friday, the 15th of January, 2021, and we had a mixed market here this week. The S&P and the Nasdaq were lower, and now the Nasdaq is lower year to date, but the Russell 2000 really outperforming this year. So far up 7.5% for the month, gained another 1.5% this week. The biotechs were strong, bonds and energy were also strong. So let's take a look at the charts and make some sense of it. We'll start with the daily time frame of the SPY. It's still clearly in an uptrend. You can see that purple or pink, I guess, fuchsia, whatever color you want to call it, is the year-to-date volume-weighted average price, and that's pretty much where we halted today. We're also, of course, above this rising 20-day moving average still, and I don't view this weakness as a reason to be negative. I view it as a reason to be cautious, however, because we're below a declining 5-day moving average. And here's what we're looking at on a 30-minute time frame. 65-minute rather. It's possible we could continue down to the trend line, or even that volume-weighted average price that we've been looking at since late November off of this peak, which had held and found buyers twice back in December. So a little bit of caution entering into next week, I think, especially in the Nasdaq, which has been a little bit weaker. It's below the year-to-date volume-weighted average price. Perhaps this volume-weighted average price near 308 is going to be important. But I'd like to also thank our new sponsor, which is the microsectors. This is they have a 3 times banking index, 10 largest banking stocks, and you know that we're in the beginning of earnings season. Banks, of course, are the first ones to start, and let's take a look at the banking stocks because they've actually been big winners so far this year. Today they did pull back. They're right on that year-to-date volume-weighted average price, and over the daily time frame, they're still in that uptrend that we've seen. Now, I don't really, I talk about the financials that I don't really like them as far as trading stocks, but if you can get that kind of extra juice on them, perhaps they're a little bit more appropriate if you're a sophisticated investor. Anyways, it's something to consider is those funds. Let's take a look at the Russell 2000. As I mentioned, this one's been the real winner this year, just a runaway freight train here. And a lot of people will tell you that means that we're near the end of the rally because we're seeing more action in the speculative names and rotating out of the bigger cap names. And possibly that's true, but the fact is, I'm not spending any time looking for a top. That's something I never do. I don't look for the top. I instead recognize that one, my stocks are starting to get stopped out. Two, I'm finding a lack of new setups, and that gets me more defensive. And I listen to the message of the market. If I try to play these intellectual games and rationalize every single move, it's going to be an exercise in frustration. Obviously, we have the inauguration next week. That's a catalyst that is providing a lot of right now nervousness for next week, and maybe that's what this market, the headline that this market trades off of. If the Russell pulls back to its year-to-date volume-weighted average price, it would come down to 206. That's 6 points from here, so that's 3%. So just be aware of where your stops are. Always be looking at what the trend is for your particular time frame. Your time frame and my time frame might be completely different, and you should trade the one that makes the most sense to you. The semiconductors made a new all-time high on Thursday and backed off just a little bit here today. Still, you can see they're above the year-to-date volume-weighted average price. That's that blue line right here, and it would bring it down to 230 if we were to see a pullback in towards that area. That is a level of interest that has the potential to become support if we see further pullback next week. So be aware of that level of interest. The biotechs continued to move higher as well. This group has been very strong, and as I've been mentioning to Alpha Trend subscribers, that initially we wanted to have our stop under that year-to-date volume-weighted average price, and now up towards this 158 level to lock in some gains if you're involved in that index. I pointed out on Twitter today the shares of Apple. Something interesting happening here. I talk a lot about the volume-weighted average price pinch. What that simply means is we have a volume-weighted average price from an important low down here, and you can see that it has held as a place where buyers have defended it. So we look at that as right now, again, potential support. We closed right on it today. And at the same time, so we have, this is basically, you can look at that as a level of demand for the market that's been increasing. The average price is increasing. And if they continue to defend that, it should continue to hold. Now, it's possible next week, a potential bullish scenario would be a quick breakdown through that level, then back up into the range and kind of come up against the volume weighted average price from the peak. That's this purple one up here that I'm drawing in. Now that I'm continuing, that is from here. And you can see what this means is here from this peak, we have supply coming into the market. The sellers have been in control from that point, but the buyers have been in control from this point. So the bigger picture, the buyers are in control, and this is looking like a pullback. Energy is building between those two volume weighted average price levels, and if the stock maybe undercuts this low a little bit, shakes people out, rallies back up into this range, it has the potential to break higher. The point is, I don't want to buy in this period of indecision while this energy is building. I want to wait for it to build and then anticipate what the potential scenario is. I'm anticipating, because the bigger picture is still in a major uptrend, I'm anticipating that it should break higher. If instead it breaks lower, it doesn't cost me anything because I won't get involved. But if I wait for price confirmation up here that the buyers have in fact gained control, then I can get involved with a stop perhaps under here or whatever the most recent relevant higher low is. So that's something I'm looking forward to potentially trading next week. I'd also put a chart on Tesla up, kind of comparing it to Qualcomm back in 1999 and 2000. I'm not trying to call a top in Tesla. I'm smarter than trying to call a top. In other words, I'm not smart enough to call a top because I have no idea where it will top out. Nobody does. In fact, if you look at that Qualcomm chart, you could make an argument that maybe the stock is headed for 1,000. But I would say that just be aware of, here's our year-to-date volume weighted average price. That has the potential that if the stock, if Tesla breaks below that and then holds below it, be aware of that it could be in for some deeper profit taking. Again, everyone gets really emotional about Tesla. It's just another stock to trade. I'm not calling it top. Just be aware and play a strong defense. Don't be the person who, I saw it all week. People are saying, hey, this market's going to end badly. It doesn't have to end badly if you have risk management as the cornerstone to your approach in the market. Let's talk about Bitcoin for a minute. Last Friday, it was up at about 39 and change. I said I wouldn't be surprised at all to see it pull back down to the low 30s. That's exactly what we got. And in fact, it was pretty amazing that the volume weighted average price from the breakout that we saw and actually let's look at the daily time frame. This is a 4-hour chart. But when this market broke beyond that 20,000 level, that's where I put this volume weighted average price. It's been on there since that day. This isn't hindsight stuff. Anyways, and then I put another layered, pass the torch anchor from the point where it touched. I was looking for it to come into this area. That was also a retracement. Instead, it came almost precisely to the volume weighted average price from that move, and that's where the buyers showed up. And we saw a strong bounce up, pull back. Then I put a volume weighted average price on this low. That's been holding. It rallied up again, and now we're seeing that volume weighted average price from the test of the breakout VWAP, so I hope that's not confusing, but that's that green one, is now holding again. So if it can hold in this area over the weekend, 33.5-ish, if it can hold above that, then I think we're starting to see some volatility come out of Bitcoin, and it's most likely, I don't think it's about to head higher dramatically once again. I think this market's telling us it needs some time to consolidate a little bit. Anyways, I hope you had a good week of trading. There were just some incredible moves in the market this week, and again, thanks to our sponsor, Microsectors, with the 10 biggest bank stocks is what these two ETNs are meant to track.